which we were selling as pensions. Were we really selling pensions? Really? Is that true? If that were very true, then the question is, why did this young man, as Mr. Mathur said that he can't think for 50 years or whatever, how come he was thinking about it 3 years ago and not this year? So the point is, what was really being sold as a pension was not a pension. These regulations were drawn up. A microinsurance product was defined really on the benefit payout. That is, if the benefit payout is 50,000 rupees or less, then it's a microinsurance product. You have similar kinds of limits, whether you look at life or non-life. But if you translate that into actual premium, you'll find the premium can vary from 25 paise. It'll be difficult to get 25 paise today, but nevertheless, arithmetically, it will be 25 paise at the lower end of the non-life product, which is the microinsurance, to 49,800, which will be a single pay for a 50,000 cover. So I'm saying that a product which presumably is meant for people with slender means, if it's going to require a payout which is going to vary between 25 paise and 49,000 rupees, I don't see how exactly that is a well-designed product or a well-defined definition. It is essential that the party which is actually offering the insurance is going to do it next year also. There should be a confidence of continuity. Otherwise, it will be difficult really to engage in it. We have seen several state governments, and I'm sure you have more experience with it than I do, where a certain scheme comes up for covering, let us say, some farmers in this section of the space of the state, which next year vanishes. Next year it will be something else, and so on. Those kinds of schemes are typically doomed to failure when you're dealing with large numbers of people. So the question is that if you're going to economies of scale kind of operation, it is essential that at both ends, at the policyholder end, at the insurer end, there should be reliability of the operations next year. We would like to redesign the proposal form, because that's a paper defined in insurance law. And the proposal form should encapsulate certain items or certain elements of information which actually is an assessment of the financial condition of the prospect. And therefore, it is something which is interwoven typically into the type of product which you are really going to offer your prospect.